Sanjay Kumar, who's the CMD at RailTel, is with us. Let's talk to him. Firstly, to start off, sir, Q4 EBITDA margins were at a multi-quarter low. Even for FY23, we can see margins overall, they were at multi-year lows. Why such a continuous decline in margins? Have margins really bottomed out? And can we see some reversal in coming quarters? What's your sense?
See, EBITDA margin, we've been talking continuously during last year also that because our project business segment is continuously having more share, increasingly more share in our total revenue. So pressure on margin will be there, but we are working out few strategies like we will have more number of projects. So absolute growth in EBITDA numbers will of course be there. We will see that absolute growth in EBITDA and profit will happen so that our investors will have a good earning per share kind of number. That is what one thing. Secondly, we are also making other efforts like recently we have finalized Wi-Fi monetization. RailTel has done world's one of the largest Wi-Fi ecosystem at railway stations, and now we have partnered with one IT company. So we will be having some revenues from that stream that will of course support our EBITDA numbers in terms of overall percentage. As far as the guidance for the next year, we will be somewhere around 20%. We'll strive to get 20-25% bracket, but we will try to remain at least 20%.
Sure, that point is taken, but project business revenue increased sharply in the quarter gone by. But it was still below the guidance that you had earlier provided for the full year. So how should one look at the revenue from this segment going forward?
This year, we are looking at somewhere around 1,500 crore minimum from project business. Last year, during last quarter, Q3, we were targeting a project business of around 800. So we are very finely close to that. But certainly now onwards, we'll be able to do this minimum 1,500 crore from project business.
Right. And could you talk to us about competitive intensity, especially with regard to project tenders? What are you seeing on that front?
Project tenders, competitive intensity is going to remain there. But since there is a telecom element in that, we are and data center element also there. So we are trying to focus more on such projects where telecom as well as data centers value-added services are there, so that our margins are certainly will be improving.
Okay, broadband is expected to support the next leg of growth for the telecom companies, but the competitive intensity is very high as of now. How's the performance been for RailWire, your broadband service business, and what is the kind of customer additions that you are seeing, and how's been the overall ARPU as far as that vertical is concerned?
Heat in this segment is very high, and growths are coming, but then there's churning also on the other hand. We are trying to bring out new innovative strategies, come out with the new strategies, kind of like using OTT bundled along with the broadband services. So that is where also we are getting some momentum. Recently, we have also come out with, in one state, we have signed an agreement and results are yet to come, but we are hopeful that we will continue to grow. Last year, the growth was not very handsome, I would say, but if we see the overall growth in the industry, since we are not in the retail segment, like we are not mobile service providers, so for us to penetrate in this market is not easy, but we are trying basically we are targeting tier 2, tier 3 market where these players are not so active. And we are becoming like, we are also providing now IPTV kind of services and OTT also bundle, so that will benefit us. But I'm not very sure that we will be doing any substantial growth business in this segment, but we are continuing to be there, and we will grow, say, around 10% at least in terms of revenue. Numbers, of course, we will be having more because of pressures, price pressures. In terms of revenue, the growth will not be that much.
Right, thank you so much for that. But we're